Hello, I'm Brian Resney, President of Resney Wealth Management, and I'm bringing you an important update about the economy and the investment market so you can better understand what we see out there and also how we are currently positioned. You know, we continue to see improving data sets, not only in the U.S., but also overseas, especially in a lot of the emerging market economies. Last week we had some great numbers from the ISM, the manufacturing data. In fact, some of those were at record numbers over the last decade. We continue to see improving job picture in the U.S., and we continue to see improvements across the board in a lot of the emerging market economies. Now, while the emerging market economies have slowed down from, let's say, 8% or 7% or 6% GDP growth, maybe down to 5 and 6%, still fabulous growth, and I think long term we will ultimately see the emerging market economies do, I think, quite well on their GDP growth, which often translates into great opportunity in their equity-based investments. We are currently invested approximately in our global tactical opportunity portfolio, about 40% on the emerging market economies, and then the balance either in REIT or in small and mid cap in the U.S., which is outperforming the S&P 500. We look at every single investment sector essentially out there, and we continue to believe in our strategy. And every investor needs to understand, and if you don't have an investment strategy, you're basically really flying by the seat of your pants. I get a lot of questions from radio listeners about investment strategy and about, how do you build an investment strategy. I think the most important thing every investor needs to understand, whether it's a client or a potential new client, is if you don't follow your investment strategy, even when it's temporarily not working, you're not going to have any chance of success. It's like baking a cake in the oven without a recipe. If you don't follow it, it's not going to turn out. We continue to see improvements in the U.S. We continue to see improvements in the emerging market economies. And one of the areas that I'd like to discuss just a little bit is especially on fixed income investing. At the end of 2011, record outflows of equity-based investments at valuations, in my opinion, that were extremely compelling. In fact, if you look at a lot of the U.S.-based areas and you look at the emerging market economies, many of these are selling at discounts we haven't seen really in a long time. Investors basically have shunned risk investments, which is usually counteractive to sometimes what you see actually happen in performance with different investment sectors. And what I mean by that is investors got out exactly what they shouldn't have gotten out of, which is equity-based investments at the end of last year, and put record numbers in what they perceive to be safe, which is long-term bonds. Bonds that are typically 10, 12, 15, 20 years in length. Most of the bonds, especially government treasuries, are grossly overvalued. In my opinion, investors over the next couple years are going to be very disappointed who basically didn't follow strategy and are basing their investment decisions on emotions and are jumping into a new fire, which I think potentially the bond market could have some of the worst returns, the long bond market anyway, over the next decade than it's ever seen. In fact, I truly believe there's chance for substantial loss in the long bond market over the next 3 to 5 years, and certainly even more over the next 10. When interest rates go up, bond values go down. Now, that doesn't mean you should shun all fixed income investing. Short-term duration, high yield bond, looking at emerging market bonds or debt, looking at a lot of the global bonds out there. The only place to buy fixed income is not the U.S., but most investors don't understand this. And unfortunately, they don't participate in really where the great opportunities are. We currently are fairly heavily weighted for our fixed income clients in emerging market type equities, international bonds on the short-term duration, and preferreds, doing exceptionally well this year. In fact, most of the fixed income parts of our portfolio are up 6-7% or more year to date. I think we will see outperformance in a lot of the international type bonds throughout 2012. I continue to see with the improvements in the U.S. and the emerging markets, I think things are truly setting themselves up for potentially higher returns throughout this year. There can always be stumbling blocks, of course, so that's why you stay diversified and you follow your strategy. But there's a lot of pent-up demand, especially in the U.S., as the consumer pared down debt and basically rebuilt their house. What I'm seeing is people are starting to actually have more money to spend, and I think some of that pent-up demand will start to come out throughout 2012 and in later years, and potentially will continue to grow our economy. Not at the pace we quite need, but still, if we can get 2.5% GDP growth or better, we still continue to improve our economy, which ultimately can improve equity-based valuations. Now remember, the only place to invest is just not the stock market. There's other asset categories out there, and you need to look at all of them. In our relative strength portfolio, our global tactical opportunity portfolio, it is still favoring some of the emerging market areas, small and mid cap in the U.S., and some of our REIT exposure that we also have, our real estate investment trust, publicly traded, of course. We continue to see those. On a relative basis, things are improving. Last week was a fabulous week. This week's starting off not too bad, but I continue to see good data sets, and I think investors who basically take the emotion part out of investing, follow a rules-based strategy, or if you're working with somebody that actually manages your money, if you're a non-client, of course, hopefully you'll have a chance to do well. I hope this update was of interest to you and it helped you understand more what we're seeing out there in the real world of investing. Remember, emotions have to be taken out of the equation. You need a rules-based investment strategy. That's it for every one of our clients. Of course, if you are a non-client, call our office. We always like to take on new clients who are nice people who want to improve their situation. And of course, if you're an existing client and you do have questions, make sure you do call our office. We always love talking to our clients. And until Sunday's show, make sure you have yourself a great week, and make sure you do tune into Sunday's show because we got some great new information that will be coming out, specifically about how we see the rest of the year turning out in the investment markets and the biggest risks that we see in the investment markets. We'll be talking about that this Sunday. This is Brian Resney. Again, make sure you have yourself a fabulous week.